Mr. Chairman, thank you very much. Chairman Powell, welcome. We're delighted to be here, and I hope that this comes with greetings from every single member that we appreciate and respect you taking the time, even though you're expected here. We think you show up, and we admire you. Mr. Chairman, you and I both know that way back when, and we assume 21, that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary stimulus to help the country, and I get that. There was about, in my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about the term debt versus growth. Debt versus growth, about this amount of money that sits out there on the debt side. Could you please take a minute and discuss this issue and how we should be looking at it? Thank you.
Sorry, Mr. Sessions, are we talking about asset purchases that we made during the...
We are. We're talking about when the Fed went and sold
QE.
treasuries.
No, we bought treasuries.
Bought treasuries.
Yeah, we bought treasuries. So, you know, it was a situation, I'll tell you why we did it. You know, we were just out of the worst part of the pandemic, and we didn't know how, frankly, how good things were going to be, how strong the economy. We were very concerned. COVID is still raging, and it actually, you know, had a very strong wave right into 22. But we wanted to just, we didn't want to stop buying treasuries too soon, because I mean that has a stimulative effect on the economy, because we didn't want to provoke an unwanted tightening in financial conditions at a time when we thought the economy was still vulnerable. You look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet, and
You moved it from about 120 a month to 110.
Well, we're down now. We've been tapering for 2 years now, and we're down more than $2 trillion. So, and we're still going. So that's why we did what we did.
Tell me what that looks like in the longer term aggregate versus with what the chairman said, debt versus growth. Because we believe the debt remains and the growth is not equaling that ability to pay it back.
So what happens is we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically issuing reserves, which is cash, and we're retiring Treasury securities. And the effect of that is to drive down long-term rates. That's the whole reason for QE.
And what are you paying for those long-term rates?
Market rates. We're paying exactly the market.
And what would that market be approximately a year ago or to now?
Well, you know, the 10-year, we're not, of course, we're going in the other direction now, we're shrinking now, but
we are.
Buying, you know, the 10-year was yielding a very, very low, the yield on it was quite low during the pandemic, extremely low, because, you know, growth was slow, there was a lot of demand for treasuries. So we were pushing down rates to support economic activity. When you can't lower your policy rate anymore and you want to do more stimulus, that's really the main thing you can do. It's actually the forefather of that was Milton Friedman, who came up with that thought way back in the past. But that's what we did, and then, as I mentioned, we turned around. As soon as we lifted off and started raising rates, we immediately started shrinking the balance sheet, and we've shrunk it a lot, $2 trillion and still counting.
You have shrunk it $2 trillion?
Yes, we have.
Okay. And what do you believe remains, and you believe you're now stable for moving forward?
So I think we have a ways to go. Actually, the level of reserves, which is the thing we're focused on, hasn't really changed. All of that has come out of what's called the overnight reverse repo facility. I'd be happy to spend some time with you on this. This stuff is very complicated. And
yes, I've tried to find new data on it, and the last I found really was a CRS report of 22. So what's
very big changes since then.
127.22. And so the changes that you speak of are important.
Yeah.
And so I would appreciate that time.
Be happy to do that.
Great. I want to thank you for being here. The confidence that the American people have that we will turn not just the economics of their lives, but of the country is very important. And I today spoke about the country. and I want to thank you for your service and time. Mr. Chairman, I yield back.
Gentleman yields back.